Good morning. Welcome for attending our lecture on the quantum finance. So today we talk about our chapter 6, okay, quantum trading and hedging strategies. In fact, we have already go through 5 chapters, right? Okay, so as a simple summarizations, so we have talked about the basic concept for the quantum field theory and quantum mechanics. I think the most important part is the double slit experiment. As I mentioned in the last lectures, in fact, the whole ideas of the quantum world are realized by so many scientists or computer scientists, including me, is because of this interesting experiment. So as you can see from this experiment, we can have a look of many phenomena in the real world have both particle and pattern phenomena. The angle you see in different aspects, you will see different pattern. So same case for the finance scenario. So as I always say in finance, as I talk with so many different people in different countries, in China, in US and in other European countries, many finance people believe that kind of quantum theory. Okay, although they don't know the details, I tell you, but they really believe the financial world have that kind of phenomena. Mainly because most of the time, as I always say in many discussion group, forums, and seminars, if you take a look of the financial market, no matter what kind of financial market you are taking a look on, so for example, in the evening, the biggest leader, of course, is the Dow Jones Index, right? So if you take a look on the pattern of the market pattern itself, clearly from second to second during the US period, which means our time is late night to 3 to 4 o'clock in the morning. You can see the market, the price, okay, jumping very fast, but they are not continuous. All the time they jump from one state to another one. So in the old state, before we have that kind of interesting quantum finance theory, we talk about this as a kind of financial pattern, as I mentioned in the technical analysis, right? And more importantly, on what we call the support and resistance level or lines. Because at that period of time we don't have any quantization mindset, but we believe in terms of psychological thinkings. So all the time as an investor, they might have some threshold, okay, to guide us them for doing something or not doing something. So for example, for the Dow Jones Index, okay. So the nowadays the biggest topic is whether it will fall, okay, under 70,000, okay, or even lower. So you might have, as a kind of investor or analyst, you might have some threshold, which price line or which price level, okay. So over this, you will see it will rebound. So after that, it will what we call breakout. That must be that kind of thing, right? So as I always say, in terms of financial trading, or I will talk about the hedging. So of course, we start with that kind of mindset, which means that kind of trading method or hedging method are well before we have the quantum finance or quantum field theory, or what we call the quantum price line. Okay, so today lecture will fall into 2 parts. The first part, we will talk about what I call the traditional way of doing financial trading. And the second part is, okay, after we have the quantum price line, that sort of thing. So how can we do the trading? In fact, I can tell you that after we have the quantum price line, okay, it's easy for us to tell people how to do trading, as I will tell you the main reason why. And the other thing is about the traditional trading method. So when I talk about the traditional trading method, in fact, we are talking about the past 15 years, okay, from the 1970 to now, almost 40 to 50 years. So as long as we have the open trading platform, okay, what we call the program trading platform, is even more popular. Popular in the sense that because in the old days, only the broker, okay, can do the trading. As an investor, they can only, say for example, through the pager at all time, okay, or through telephone to tell the broker what to do, okay, or the broker advise them what to do. They cannot do it by themselves, okay. But after, of course, we have the internet and also the program trading. So all the trading can be done by the investor themselves. So that's why that kind of phenomena for discrete or quantized pricing line become more and more obvious for us to see. So that's why as we try to promote quantum finance and quantum price line, start with 2012 to 2013 in Shenzhen. And in fact, every day I spend about 50 minutes in the cable TV of Shenzhen for the financial channel to talk about the financial forecast. We will talk about this in the coming lecture. Just like my idea is just like you report the weather, okay, every day, using the same strategies. As I always say, the main reason why I come into these ideas is because my first job after graduation is working in the Home Observatory for weather forecasting. Okay, so I have two jobs at that time. It's as a forecaster to report weather, just like you see every day, and at the same time to computerize the weather forecast system, the what I'm talking about in the last lecture. Okay, using numerical analysis technique. Okay, that sort of thing. So it's not a new thing, as I always say, but of course, using this for financial prediction and analysis is the first. So and that is also the main reason why it becomes so acceptable for many people, because many people believe finance in particular have a particle and also the wave or pattern property. But of course, in the old days, we cannot automate or quantize that sort of thing. But nowadays we can. So that is the main reason why. And also the main reason why it's become so acceptable for most people is, as I always say, forecast weather is different from forecasting finance. Forecast weather is that the more people believe it won't affect the result, right? Because it's all natural. But for finance are different. If your method is very scientific and very accurate, I will tell you why, very accurate, okay, by using AI system. So the more people believe, the more accurate it is, of course. So very important for the quantum price line, which means you can ask many people, if your quantum price are well accepted by many people, it will become what we call a self-fulfilling hypothesis. So because many people believe that, so they become more accurate. So it's just more like a triggering problem. So at the end, you don't know whether it is accurate because it's accurate, or whether because many people believe it becomes accurate. But as I always say, and I will talk about this in the TV show, is never mind, it's accurate. Okay. So all the time is if you have some scientific method to do some analysis, no matter what kind of method it is, the more people believe, okay, the more accurate it is, especially for the finance. Okay, so that's why, as I always people ask me, is what is the difference between financial engineering with weather engineering? Is financial engineering is the more people who believe, the more accurate it is. That's true. Okay, so today is a rather interesting lecture. Is different from other lecture. I spent a lot of time on R&D, that kind of thing, to come up with the information you have. This lecture is 100% on practical thing, which means the thing I talk about this today is my experience in the past 20 to 25 years. Okay, because the first time I'm doing the trading is when I'm studying in the Hong Kong U in the 1986. Okay, the first time I touched the stock market. Okay, and doing tradings. So these are all what we call practical experience. Okay, for all those trading methods. So as you can see, trading method is a kind of halfly scientific, halfly human judgment. Okay, so but of course, okay, to be scientific is good. so that you will set what we call the stop loss. I'll tell you more today. Okay, so today you will try to learn what I have practical experience for the past it used to be 25 years, okay, on the actual trading. Okay, so it's the first part. And the second part is on after we have the quantum finance and then quantum price line. So how to integrate all this quantum finance theory and also the quantum price lines into the trading and hedging strategies. Okay, so it will be today's focus. So, as I always say, as I mentioned at the beginning of today's lecture, is for us, okay, in finance, quantization is not new stuff. We all believe that. Okay, the truth is, okay, before we have quantum finance, we don't know how to do that kind of quantization. Especially, I can tell you that how to evaluate all those price lines. Okay, I can tell you that many people in the past want to do so for so many years, but it becomes more and more difficult because, as you can see, there are so many financial products. For my MT4 system, I have 120. I will show you later on. 120 financial products. It's very difficult for human beings to do it by themselves, right? Because in the old days, even now, okay, some people doing that in Shenzhen or in Shanghai, and manually to draw your own support and resistance and do the trading. But I tell you that as a fund house, you can't do so because there are so many products, over maybe thousands of stock, okay, or hundreds of forex. You can't do it by themselves, okay, because as you know, it is changing from time to time. So it must have some automatic method to do so, right? So today we talk about that, okay, and how to make use of it for trading. That is the most important part. As I always say, if you only have the quantum price line, it's just a price line, right? So the most important part, of course, is how to make use of it for the daily trading or hedging. So today we'll talk about that. Okay. So today we talk about the practical trading and investment topics, how to do the trading and how to do the hedging. Okay. In fact, I can tell you that you can do it manually, or you can do it automatically using MT4. In fact, for my over 10,000, in fact it's 20,000 around, members in the quantum finance forex centers, maybe 40% do it manually, and the over half is doing as a kind of pull trading. The interesting thing for the quantum price line is you can do it manually if you like. It just replaces the support resistance line, right? But of course, you can, because we have all those pre-calculated price level, okay, the quantum price level, which means you can also using an algorithm to do trading. The good point is for some people they can use many methods to do trading based on this price line. But for some other computer scientists or technical analysts or the quant, they can use our quantum price line for automatic trading. Say for example using the MT4 system. So that is today's focus. Okay. And in terms of the transitional method, for so many years, I've come up with 7 different major methods, what we call the 7 major trading and hedging method. In fact, if you go through the internet, okay, and you search for trading technique, in fact, there is no consolidated solution on that because these are all very, what I say is very practical thing. But frankly speaking, this 7 method almost cover all those different kind of trading technique you can imagine. Okay, maybe for some people they have more, for some people they have less. But I think this 7 method is quite fair for you to be experienced traders or experienced financial analysts. So all these are important. Okay. So we'll talk about this. Of course, the next step is how to make use of the quantum price line and quantum finance theory, put it into the actual trading. That is the important point. And that is the main reason why is every day at 8 to 9 a.m. we broadcast all those quantum finance forecast to all over the world. Okay, that is the main reason why. Okay. So start with the first thing: financial trading and hedging technique, in a nutshell. Okay, it's always for my book is always do so. Try to make every so-called complex thing become very daily life. Okay, in fact, not difficult as I always say, but make it good or make it perfect. Okay, or earning money, of course, is difficult. So in other words, the basic method for this different method is not difficult to understand. In fact, it's quite easy. But of course, how to make use of it, okay, for you to make money, of course, is difficult. It depends on what we call experience. And that's why we have the prudent trading, right? Because we cannot always depend on human judgment. So there might be some, what I call automatic method to do that kind of important job. So that is the main reason why we promote that kind of scientific investment method. Okay. So basic concept. So in classical finance, trading strategies, okay, is very important. In fact, I can tell you that in terms of the Western world, financial analysis and financial trading are two different kind of things in many fund houses in US and in Europe. The main reason why is financial analysts or financial analysts focus on analyzing the financial market or different financial market. It won't give any judgment, just analysis. So say for example, financial analysts every day have to investigate the financial market, say for example for the Dow Jones, and then give every day a daily report, okay, on different aspects, and then giving the price line, okay, or support and resistance for every single product every day. It's very standard overall. And then they don't do the trading. The trading is done by what we call the trader. Okay, in fact, it's a separate department. The main reason why is so because if the trader also doing the analysis, you can imagine they will be biased. As I always say for example, if you already do a buy order for Dow Jones, of course you expect it to come up, right? So when you do the analysis, you will have some kind of bias, the angle for you to do any so-called scientific analysis, right? So why not we separate into two? So in the West and also in Hong Kong, we always do that, separate the trader with the analyst. So by doing so, the analysis report and all those S&R will become more neutral in some sense. Okay, so for us as a prudent trading, in fact, we are doing 2 into 1, but it's no problem. Because why? Because once you have a scientific method of trading, the trading become automatic, which means you won't be biased by your analysis because they are all programmed. As I always say, program has a true fact is they have no feeling. Okay, it will do or not do. Okay, it will buy, it will sell, or it will hold, because all the time it will hold, right? You will do only 1 or 2 trading per day, right? So one of the good points for prudent trading now they become popular is because they are neutral. Neutral in the sense that once you program the whole trading program, okay, you will let it go. Which means by doing so, you can be the analyst and also the trader at the same time. In fact, as I always say, in that case, the trader in fact is the program, right? Not the designer. The designer is just design the program. So that is the difference, right? So in terms of finance, we have trading and also hedging. But in terms of the trading operation, they all the time they are come together. In fact, hedging is a kind of trading technique. I can tell you so. Later you will know what I'm saying. So for us, hedging is very popular. As I know, in Hong Kong and also in China, people have some negative thinking about hedging, right? About the hedge fund. Okay, that monster. In fact, it's not. Hedging, as I always say, is a kind of trading technique that they will put the risk control, okay, as the most basic and important factors before they do anything. The main reason why is because of the investment numbers is very big. they are not allowed not to do so. Which means for our hedging strategies, the number one theory is to protect the assets, not to be greedy, as I always say. So hedging, in fact, is a very neutral kind of or natural kind of trading method. But of course, because the technique is a bit complex, so for most of the trader or investor, I will say, oh, okay, you just begin with some simple risk control. Say, for example, using cut loss, stop loss to do that. Okay. When you have more experience, you can make use of some what we call the hedging technique. So what I'm saying is, as a kind of trader or investor, all the time you must have some kind of risk control mindset. In hedging is, in fact, is tailor-made for that kind of situation. Okay, so it's not a risk kind of action. In fact, it's a risk control. But of course, I won't argue that some people will make use of it to doing some very risk kind of thing. But as I always say, it's not a kind of hedging. Okay, we are talking about. So make sure that. So in the old days, in the 1970 and 80, okay, people tried to invent many kind of trading method. Of course, in order to make money. Okay, and now become more and more practical and also more scientific in some sense. Mainly because of the fund become larger and larger. That is the main reason why. Okay. So, but thanks to the advance of the computer facility, so even for the Mac and the PC, I think it's the most important part. As I mentioned, in the old days, only the trading firm or the broker, the bank, and the financial institution can do the actual trading. But now, every single investor at home can do so. That makes the difference. So, as I always say, that's why nowadays the financial market becomes so fluctuate or so popular, and the lump sum so big. It's mainly because every single financial people have the chance to do it by themselves. Make it more personal, okay, by your own design and own programs to do so. So that's the main reason why. So of course, in order to do so, we need some more logical or more reasonable, okay, or more clear trading and hedging technique. So there's the today's focus. Strategies. So basic method, okay, and hedging method, including the first one, single product trading and hedging strategies. Mutual product trading and hedging strategies. You can imagine, because as you can see in the MT4 system, we have different product, right? We have the forex, we have the index, we have the commodities, okay, and we have the cryptocurrency as well. So your trading and hedging can be within a product. It can be within a group of products of the same kind. So for example, when you talk about commodities, we cover the gold, the silver, the cotton, okay, and also the oil. Oil, we have two kinds, right? So when we talk about trading, it can be also cross-market, which means it can be between the gold and silver and also the US currency. In fact, it's very common, I can tell you, as a kind of hedging. I will tell you a bit later on. So we call this the cross-market trading and hedging. Hedging especially. Okay, all the time when you do the hedging is we are doing the hedging pair. So it can be the same kind of product or different stock. If you go for any finance book, they will talk about Coca-Cola and Pepsi. That sort of thing, right? By doing so, what we talk about is when one go up, okay, and then it can be counterparted by the other product or other stock of the same kind, okay, and you believe they have some what we call correlation. So by doing this is a kind of asset protection, in fact, okay, in the old days especially. But now, of course, because we have more data and computing facility to support, we can also do what we call the cross-market hedging between different markets. In fact, I can tell you that the three most important market doing hedging is the US currency, the oil, and also the gold. All the time, I can tell you that the market fluctuates are between these three. One reason is because, as we know, over the world, over 90% of the trading is carried using the US currency. So US currency is the important part. And the second part is all the time, okay, the money is flow around between the currency market and also the property market, the actual product market, what I'm saying. Either the precious gold or silver, especially gold, and also an important product, oil. Okay, so these three are all what we call the very important triangle. And many people using these three as a kind of counterpart in tradings. Okay, in fact, there are many kind of things, okay, we can undergo when you have more experience. So also, of course, you can using a particular financial index to do trading and hedging. And actually, it's the main reason why we have that kind of index. As you know, the Dow Jones Index is a collection of 30 major stocks in US stock market. Okay, which means by investing the Dow Jones, you are investing these 30 major stocks. Say, for example, for the Nasdaq. Nasdaq is focused on all those IT big guys, right? Like the Facebook, like the Google, like the Netflix, that sort of thing. Okay. Of course, the most important part is what we call the cross market trading. Cross market trading means you are talking about the worldwide market. Okay, just like you find in your MT4 platform. Okay, if you're a genius, of course, you can design some counterbalance programs. Okay, between different markets. So totally, we have four major markets, right? We have the currency market. Okay, including cryptocurrency. We have the financial index, okay, as a kind of consolidation for all the stock. We have the commodity market, okay, including all those what we call the commodity product, like the metal, the silver, gold, like the crude oil, okay, two major kinds in the world, the US oil or also the European oil, and also we have the cotton, that kind of actual agricultural product. They are all important things. The cotton, the sugar, and so on. So all the time people think about how to protect your assets by doing some hedging between these or different kind of product. In the old times, I can tell you that it's almost impossible because they are all what we call the standalone market. But nowadays they are all collected together. Say, for example, in your MT4 system. Okay, just like my MT4 system using the forex.com, it contains almost all the important financial products you can trade over the world. Okay, but whether you can do it or not is another thing. But the most important part is it allows you to do so. That is the most important part. Right? So although the financial and technical analysis are both popular and commonly used in the trading algorithm, okay, so what I'm saying is, okay, in terms of the program trading, you still, okay, should consider that kind of thing. Although you don't need, but you still. Why? The reason why is very simple. As I always say, when you're doing a trading online, in fact, you are playing around what we call a zero-sum game, right? Zero-sum game means when you earn money, some people very well have to lose money, which means you are what you're doing. You are doing a game, okay, with the opponent of the world. So for most of people, okay, they still stick into the technical index like the RSI, MA, MACD, and also the stochastic, that sort of thing. So in order for you to program your system, of course, you can consider it as a kind of element. So in the coming lecture, should be lecture 9 or lecture 10, I remember, we will talk about the chaotic neural networks. So in order to do so, of course, you can put all those financial indexes into this as well. So that is the good thing. And the good thing is for the MT4 system, it allows you to see the pattern and using the index so that you don't need to program by yourself. And most important part is for writing the MT4 program, you can also call this financial index just like calling any kind of function. Of course, the most important part is whether you can invent some actual program that can make money, right? That is the challenge. As I always say, in the old days, is the ultimate challenge for any programmer, right? Writing a program to make money, okay, not selling a program. So that's why, as I always say, so many people, even not from computer science, they try to learn that kind of thing, especially people from business and finance, which you can see they are not from CS. But most of my members in the quantum finance centers are non-computer science people, mainly from finance. So as you can see, for the MT4 system, it's quite easy to program, right? Because the focus, or what I'm saying, the audience is not computer scientists, it's financial analysts. So that's why they are quite different. Okay. So recall what we have learned in the technical analysis. We have learned some major pattern, right? Major reversal. As many students ask me, a funny question is, can we write a program to do the pattern recognition of a major financial product and pattern? My answer is yes. In fact, in the past 20 to 30 years, okay, at the beginning when I'm doing research in PolyU, I have some project on that and figure out all those major patterns from the financial market. And that time I'm using the Hang Seng Index as example and publish several papers. But I tell you it's not so successful in some sense because, as I always say, it's not difficult to analyze a single chart, but what timeline you are using, that is the problem. As I always say, as I always talk about this in the TV, is whether you're using the 1 hour, 4 hour, 1 day, 2 day, 1 week, which one you should use, no one knows, right? And if you take a look on the MT4 patterns chart, you will see different time frame, the pattern are totally different. So it's not a matter of whether you can capture the pattern, okay, from the chart. It's whether the chart is the chart you should believe, not the other timeline. That is the problem. If you come to the market and ask many analysts, they will also do so. Tell you that, yeah, it's not difficult to do the pattern recognition. It's not difficult, but which timeline you believe, that is the problem. Yeah. So as I always say, why not you just put the data and together with the quantum price line to do the forecast using neural networks. Okay, that is what I think about is when I got a PhD in year 2000. And also that's the reason why is I come out from Hong Kong of surgery, okay, not to focus my whole life on weather forecasting, but to financial forecast. So that's why. Okay, all the time there may be some people doing something different, right? So we learn all of this, the indicators. Okay. So as you can see, we have two kind of things, right? First is some pattern. Okay, easy to see, but difficult to do judgment. Okay. The second kind is the financial index or the technical indicator or oscillator. These things are easy to calculate because already we have the program, right? The function is called. But of course, difficult to do the judgment until we have computer programming, right? And we have the neural network. I will tell you so later on. Okay, that will solve the problem. Okay. So, of course, we have some very high-end kind of product. We also talk about this, okay, in the coming lecture on what we call chaos and factors. These are all important stuff in financial engineering. And also, if you have know a little bit on the weather modeling, these are also the major focus. So as I always say, weather forecast and financial forecast seem to be different, but the whole concept I can tell you that is the same. But the difference is financial forecast is more worth to study. Not only it can make money, okay, because at the same time you will lose money. Right? But the most important part is the more accurate it is, the more people believe, and it will become more and more accurate. That's I always say in many seminars and talk. That's true. That's true. That's the main reason why so many people, including me, giving free of charge forecasts every day, because more people believe it will become more accurate. Why not? Right? Okay, so we start with the 7 major financial trading and hedging algorithm. Okay, enjoy this. Not difficult. First, for this is there are so many techniques people think about. I can tell you that in the past almost 10 years when I working in Shenzhen to implement my quantum finance system and also had the whole investment company in Shenzhen, which have more than 5,000 staff. Okay, most of them are traders, of course, and sales. And the technical people not too much, and over 20 cities. Okay, every day we come across many different kind of trading method. Every day, okay, and sometimes it's okay, sometimes it's not. But all the time you can think of something. If I post fractional traders and poem traders, I tell you, it's quite interesting. So we come up with many methods. Okay, so I consolidate into 7 different kind of method. First, trend trading. Okay, using the trend. Okay, these are all with Chinese. The main reason why is in the past 10 years when I doing seminar in different country, different city. Of course, I'm talking in Chinese and in Putonghua. Okay, so that's why they all have Chinese jargon on that. So the first one is using trading. Okay, so we call this the trend trading strategies. The second is what we call using the breakout. Okay, in Putonghua Poway. It's as you can see all the time when we do the technical analysis, we have so-called the breakout point, right? So for some non-experienced trader, they will use trend trading and they will cut loss during the breakout point. But for some experienced traders, they won't do trading in oscillation state. They only do trading in breakout point and what we call the breakout trading. These are all for the experienced traders and earn what we call big money. That's true. But of course, they should be very experienced. Because all the time it can easy to make mistake and loss a lot if you do something stupid on the breakout point. So this is the second method, breakout trading. The third is what we call reversal trading. Reversal trading, in fact, is very common at the beginning in US and Hong Kong, but now it's also common in here. It's if the market go opposite to your trend, okay, instead of cut loss, okay, you will reverse your trading direction. But again, it should be very careful and should be experienced for you to do so because you will have double loss. And we call this the reverse trading. The fourth kind is what we call the channel trading. Channel trading is very common nowadays in overall because of poem trading. I'll tell you why later on. Okay, and it seems to many people that it's easy to make money, but it depends. Okay, you can try in future, and you will see. Okay, it seems to be very easy to make money, but of course it's not the case. But it's rather obvious channel trading. Okay. The third kind is what we call averaging trading technique. Averaging trading technique, in fact, is very common practice. Okay. In fact, as I always say, all this kind of trading technique is not unique in the sense that you can mix up, or what I say is you can integrate different methods into your trading strategies, which means you can use 1 and then 2 and then 5 at the same time. Different scenario, of course, in your program. That is the reason why it becomes so popular, because although we have 7 methods, but the combination of all these methods, it can be a lot. You can imagine, right? And of course, another one is very important is the stop loss. Okay, it's a trading strategy, stop loss, in fact. But for me, okay, as I tell every single analyst and investor, people who invest, is it should be a standard method, unless you have more experienced method to replace it. Which means if you don't have experience, better to do the stop loss every time you do trading. Which means you set the stop loss point. Okay, very important. And the last is the hedging technique. Hedging technique, of course, as I always say, is a kind of a combination with one or more kind of trading method at the same time. Okay, not difficult. Okay, all this can be taught within 2 hours for me. Okay, every time. But how to make it wisely is another thing. So that's one. So we go through it one by one. Don't worry. First, trend trading strategies. So trend trading strategy also what we call the forward trading. Follow the trend. Remember, when we talk about the trading, normal people, as I always say, is trend trading. That reason why we have the trend. Which means if you define the market is a bull market, right? So you should buy, or you don't do anything, but you should not sell, right? But if you define your pattern trend as a bear market, you should sell, or you hold, but you don't buy. Okay, we call this the trend trading, which means you do the trading by the trend, not against the trend. So we already talked about this in the technical analysis. Okay, so it's not difficult to understand. Say for example this, right? So in an uptrend, what you can do, you have the trend line, right? Uptrend trend line and downtrend trend line, which means you should hold or you buy, but you cannot sell. The truth is when you buy, as I tell you beforehand, right? For an uptrend, of course, all the time you can buy after a breakout point. So if some of this kind of uptrend, of course you can buy when the market is above this. Of course you can run a program on that, right? If you can. Say for example for the downtrend. So we call this the trend trading. Okay. In fact, most of the trading over 4% overall are trend trading. So that's why the market flow, right? So all the time, the most important part is to do so you have to define the trend. Either uptrend, downtrend, or no trend, oscillation. If you define uptrend, you can only buy. If you define a downtrend, you can only sell. The only thing you concern is what is the buying signal point. All the time we set a breakout point, okay, to do so, as I mentioned before, right? So the first kind is easy. Second, trend trading method, MA crossing. MA crossing is, remember, when we have the moving average, what we can do is to make use of it, okay, and the crossing line, as I show you in these figures, yes. This is the actual product price, okay, for the S&P 500, and this is the 200 days MA. So if you have the MA crossing, okay, remember, if it is down course, you should sell. If it is up course, you should buy. Okay, simple as that. So the MA crossing, the good point is it gives you the signal point. In other words, in terms of the MT4 program, it's simple, right? So every second, okay, or every time step, you check whether it's over or below the MA line, okay, and then you can release the signal. It's even more simple than the previous one, right? But of course, it depends, again, your experience, what kind of MA you're using, what is the MA date you're using. So again, you can using the previous data for simulation. So that's the good point. So as you can see, why the point trading becomes so popular is if you have a method, you don't need to wait. You can make use of the past 2,000 days to do the simulation for you. See whether it works. Works means make money, right? So that is the important part. So it's the MA crossing. Not difficult, right? Easy to understand, okay? Not difficult to program. So the first kind is using the signal line crossing. Remember, we have two kinds of crossing. The first one is using the actual price and line, okay, say for example MA. The second is using two line. One is a signal line, okay, one is the product line. Okay, so this, the fast moving line is the 5-day MA. The slow moving line, of course, is the 20 days. So when the fast moving line down cross the slow moving line, of course sell. Otherwise, buy. Simple, right? So again, you can use the past 2,000 days record to test your program. And remember that how do you choose the day, right? You can have many methods, or you can using the Fibonacci, okay, numbers, the golden ratio, that sort of thing, to define all these numbers. So for example, 5, 30, 21, and so. Okay. Because these are all very popular numbers you can choose. Okay, for a short-term, mid-term, or long-term time frame. So these are line crossing. Okay, using trend trading. So the second pattern using the breakout. So breakout, my favorite, is very challenging. So you only do the trading when it breaks out. So people may ask, why you using breakout, not the normal trading? The main reason why is breakout is if it is an actual breakout, it will moving very, very fast and beyond the daily oscillation. Okay, which means the profit margin will be very high, not simple oscillation. But of course, your technical analysis techniques should be very, very good. Otherwise, maybe the breakout is not the actual breakout. So that is the main concern, right? So again, not difficult. But if you are an MT4 programmer, you will see that using the breakout to do the MT4 program is not easy. Because first of all, you should be very accurate to define your pattern first. And then you define the breakout point. That's not easy. But many people, especially in Wall Street, doing so. Yeah, many. So that is the main reason why. Okay, and that's why I put it into the second. Okay, also very popular breakout. First, using the support and resistance. Okay, that is more common because once you define the support and resistance either manually or using your pattern recognition technique, of course, you can using the breakout strategy, which means after that point, you predict most of the time is to break out so that you send your selling signal. Which means you don't do anything on that. You only do when it break out. I can tell you in Hong Kong, especially, many experienced traders, okay, claims they are good at that. Not the what we call oscillation trading. Is only on the breakout trading, on that kind of phenomenon. As I already mentioned, breakout trading we have of course two directions, right? And most of the time using the same direction is more profitable because once it break out, when the market fall, it fall a lot all the time. Then rebound a lot. In terms of statistics. Say for the rebound. Okay. So all the time I do so. Not so much on that. But all the time when the market drop, it drop a lot and very fast. But when you rebound, all the time it takes several days. Okay. It depends. When you have more experience, you will know. Okay. One is the reverse trading. Okay, reverse in fact is the same case, but in the sense that okay, it's doing the other directions. Okay, so using the, say for example, the head and shoulder top to do so. So this is the same pattern. Okay, but you are thinking about the reverse way. So we will call this the key reversal pattern trading. Okay, or reversal trading. Okay, so it is one-to-one corresponding to all those key reversal pattern we are talking about, right? So because the trend is this trend, so you try to predict that direction. So of course that kind of trading is reverse trading, right? So it depends on the method you're using. Okay, and you follow the guideline we learned in the technical analysis. So which means we combine the technical analysis technique we learned for the reversal pattern and put it as a program trading. But of course, you need some tricks to implement into a MT4 program. Okay, so for example, the famous head and shoulder pattern. But as I always say, as a kind of standard pattern, they should be set like this, right? They have the head and the lower shoulders, and the shoulders should be the same level, more or less, and also it must have a left line. Otherwise, it's not a head and shoulders, right? So you can, which means you have many kind of key reversal trading. But as I always say, only a couple of them are important, right? Some of them are difficult to judge, okay? Let alone using the program to do so, right? Okay, the second one is a reversion, of course, is using the support investment. That one is very popular. And that's the reason why every day, as I always say, many analysts have the daily report and tell the investor all those support investment line, and then you can do what we call the reverse trading. Reverse again is reverse the trend, right? Because of course, it's a kind of reversal. Okay, when we go into the resistance, it will go down. When you come down to the supporting line, it should be rebound. So these are all reverse trading, right? Not following the trend. So vertical. And that kind is very popular, of course. If you believe in the S&P, S&R, of course you believe in the reverse tradings, right? Okay, using indicator, my favorite. Nowadays, because we have so many indicators, for example, using the RSI, the 70-30. Of course, what we can do is using the 30 and also the 70 to trigger your buy or selling signal. Okay. Of course, as I always mention, is I all the time will combine different index. Okay. For me, I will use the RSI, the stochastic MACD as well. Okay. Together with the current price pattern. Okay. So that it will give you more signal point for you to design. Okay. As I always say, not the more the better, because you can imagine for good traders, okay, for the same product, you won't do a lot of trading per day, maybe only one or two. You won't do too much, right? So you can imagine, okay, what kind of signal you expect and how many signal it have. That is the important part. Okay. So that's the only thing is using the technical index. Of course, you can combine different kind of index to do the trading and put it into program tradings. So there are many things you can do. Channel pattern, channel trade, and that is very famous nowadays because as I always say, for many products, especially for the forex, all the time it will something like this. Okay, during the daytime, as I always say, the Asia period, it will seem to oscillate within two imaginary lines, either the uptrend or the downtrend. Okay, or even they are horizontal, just like S&R. So in that particular trading, you can do that kind of trading, but be careful. Be careful. Is you must have stop loss. I will tell you later on, because all the time it will break out. And I have always said, if you break out, it will break out a lot. So if you don't stop loss, it will be very serious. Okay, but that kind of trading is very popular. When you go outside, many people will ask you that. Ask you is these two line, so that they can do the channel trading. So that's why I put it into one of the methods. Okay, very common. Either in program trading or in manual trading. So another kind, yeah, actual thing. So as you can see, for the this one is the Australian dollar against the Canadian dollar. Okay, one of the major trading pair. Is all the time they have channeling. Okay, and people all the time will do buy and sell, and so on. Okay, until it break out. So the funny thing is, once it break out, it will come into the second support and resistance. All the time, something like this. Very popular, that kind of thing, especially during the daytime. And many people believe because of there are so many trading programs, okay, in the market, so that for the program all the time you set different line for doing trading. So that's why we have the control line concept, right? Using Bollinger Band. Of course, a Bollinger Band is a very common kind of thing, okay, especially for those what we call inexperienced traders. All the time when you draw the Bollinger line using the 20% threshold, all the time you will think that they are very accurate. And the second part is because when you are using bottom line, it's super easy to do the MT4 program, right? Because the bottom line is one of the bottom band is one of the function, right? So your field is very simple. Every single time step, you check your price, either it touch the upper band or lower band. That's it, right? And trigger the bounce up. You can do so, and you can try. It's rather accurate all the time, but again, you have to do more experience before you do the actual thing, right? But many people believe that's true. Okay, so that's why there's many things you can think about it when you are what I call doing the pump trading, right? Oh, averaging. Averaging is a simple but important concept. The concept is very simple. Instead of doing one lot, say for example 1 million in a particular point, why not you separate into 3 batch? 1/3, 1/3, 1/3, 1/3, 1/3. So the good point is if you're doing the averaging, even though the market go in the opposite directions, so the overall will be the average price, so that it will be more safe in some sense, right? That is what we call averaging concept. It's a very important concept. In Hong Kong, in US, we are always recommend people doing so every time, especially for the big customer. Okay, investor, more than 1 million US or RMB in here. Okay, try to break down your investment into 2 or better into 3 batch. If it is going opposite direction, you can average your price into a better price. It's very important. It's very important. So the whole concept is simple, but it's important. Okay, we call this averaging. So you can imagine averaging concept can be integrated into different methods we have already talked about, right? That's true. In fact, for a realistic investor, all the time they are using averaging. For me, all the time it will be 3 batch. Okay, so all the times you can take an average, better price. Okay. Again, not difficult to program, right? You just separate into 1/3 of your X, right? Stop loss. Stop loss are easy to understand, but different code to follow as a human. Stop loss very simple, right? Every time when you do any kind of investment, you set another price line, okay, against your direction, and that is the cut-off point. So, for example, if this is using a buying signal, it should be falling, right? So it will be below that. On the other hand, right? So in terms of prompt trading, we force, okay, and recommend all the investors doing so. There are 2 reasons why. First is all the time when you're doing the prompt trading, you trade a lot of product. In fact, you don't have time to watch it from time to time. So you must have some protective scheme when you fall into the opposite directions. So set a stop loss. So for many countries, okay, the government and also the financial institution recommend the investor all the time when you set any order, remember to stop loss. Very important, very important. So be careful. Okay. Hedging. Okay. So first of all, the hedging is what we call the single product hedge. Single product hedge is not difficult. In fact, it's instead such like this. Instead of putting stop loss, okay, when you set an order, you just put opposite directions order at the same time. So we call this hedge, which means, so for example, when you're doing a buy over there, okay, and then it drop, okay, so of course you can cut loss over there, but of course you can, when you go down, you can set an opposite direction order, right, which means sell over there, over the S2. So when it drop into S1, okay, and also if it is a good resistance point, of course you can harvest this gain, and when it rebound, you can get the profit. So hedging, you can see in this simple case, is it can first protect your loss. Second, if you are lucky or you are experienced, you can earn money as well. But of course, you must have to be very careful, right? careful in the sense that different from stop loss, as I always say. Stop loss is simple. Either loss of money or don't lose money. You don't need to think about anything. But for the hedging, the difficult part is when you release your hedge, which means your selling order. It depends on your experience, right? So we call this when to release the hedge. That is important. You can try so when you are using the MT4 at night. You will know what I mean. Easy to understand, but difficult to implement. Just set opposite order in the opposite direction, right? As I always say, as a first-time investor, you think, very easy, right? So why not people lost? You lost, I can tell you. Because it's very, very difficult to release the hedge. Difficult in the sense that difficult to find a good timing. It's a matter of time for you to do so. In terms of finance, we always say time is price, right? Different time, different price. Price is time. Which means which price you release the hedge. As you can see, if you release the hedge too early, you will get lost a lot. So when you release the hedge, it is important. So that's why not so many people doing so many computer modeling on that, right? Second thing is hedging using same platform, multiple product. Okay, so that kind of hedging in fact is not difficult. It's using the same theory, but the hedging part using different product. And in my old days, we come across some different kind of theory. One of the most interesting theory is what we call a cycle theory. Okay, it's in the whole world. I tell you, we have 5 very important currency. The 5 key currency: U.S., British pound, Australian dollars, Canadian dollars, and euro. These are the 5 major that hold up to 80% of the money flow overall. So some theory is that you can do some kind of cycle, which means the theory behind is when one go up, others will go down. If they all come together, will be the complete path. Yes, that's true. In fact, in the past year, we have tried different method and earned some on that. And some customer and investor believe in that. Okay, and use our package. Yes, you can think about that. In fact, it is a kind of a project for you to try. Okay, so the mystery thing, of course, is how to do the cycling and how to choose the product. But for the choose the product, not difficult because this 5 is already very well known and it already cover 80% at least, I think, the currency flow at any time overall. So you can think about it. Okay, when you do your project. Okay, multi-platform, multi-product. That one my favorite is in terms of finance, we all the times because in all this time we are trading many different kind of method product. Okay, and 3 important market are very important: the oil, the U.S. oil, okay, and the U.S. currency, and the gold, not silver, gold. Okay, these are all 3 important market that many people study a lot. How to make money off that? Okay, to do what we call 3-party hedging. That is important. Okay, think about that. Maybe when you go outside into a trading firm or financial institution, because now the financial institution also doing the financial analysis, right? So you may come across that kind of project. Okay. So it's this coding triangle is very important. Okay, the oil, the gold and silver, and the money. As I always say, when one go up, other will go down. That's true. Even nowadays for the crisis. Okay. But nowadays the crisis is a bit different in the sense that the oil and the gold also drop most of the time. The main reason why because people want to capture more money, actual money. Okay, in the old days when the oil drop, all the time the gold will up. When there is war, I can tell you that all the time the gold will go up. Sometimes the oil will go up because if you have warfare, of course you need more oil, right? And the money will go down. And now because of the rise, the money go up. enter the currency because many people want to have more cash, so the money go up. Okay, rather the product go down. So all the time they change, one go up and down. So that kind of theory all the time is quite, what should I say, is quite true in some sense. Okay, so the first part we have 7 different methods. Okay, so the second part is how to make use of the quantum trading. As I always say, quantum trading is difficult to calculate, right? Okay, we make use of so many weeks, but easy to use. As I always say, you can imagine that as a replacement of the support and resistance. That's it. So that's why quantum trading, quantum finance is so popular, right? Because easy to use. So it's not funny because just like the iPhone, right? The iPhone, it's a very typical kind of thing. Difficult to produce, very high tech, right? But easy to use. So things are complex doesn't mean that it's difficult to use. All the time it should be easy to use, right? Just like weather forecast, right? Weather forecast, of course, very, very complex, but make use of the forecast very simple. When it says it's raining, oh, bring umbrella. Right? When it tell you hot, oh, don't wear too much. Simple, right? So this part will tell you how to make use of the quantum price line, especially on the trading strategies. Okay, not difficult. Okay, don't worry. Basic concept. So as I mentioned, we have 2 kind of method to do the quantum finance, and we choose the quantum and harmonic model because this method can tell you a simple way to calculate the quantum price line or the energy level so that you can do the trading. And second, you don't go through in detail, and it only takes us to use simple machine to do so. No need for supercomputers. Okay, and the most important part is actually you can calculate the important thing, the price line. That is the reason why. Okay, and we really need the price line to do the trading, but that is important. So in the past few lectures, we already talked about how to make use of the quantum price line and how to do the evaluations and also the modeling. And in fact, it's a one-to-one corresponding between the financial market. So why not we strictly use the quantum price line as a replacement for the RS and RS, the support and resistance. Okay, that is the major concept. Okay, it's a one-to-one corresponding. So application. So how to apply this in the trading strategies? Okay, many methods. The first one is that we integrate with the recurrent neural networks, or what we call chaotic neural network, to do prediction. We will talk about this in the future lectures. Okay, and GA for the automatizations, fuzzy logic for the falsifications, and chaos theory to produce the chaotic neural network. So we have many different kind of combinations. Okay, and of course we can directly using the quantum price line for doing the trading as well. So that's what I'm saying. So application. So as I mentioned in the previous lecture, okay, start from 9/10/2018, okay, December. So we have official launch the quantum finance forex centers, and every day we will produce the forecast for all the product, total 120, okay, with currency, forex, commodities, and financial index. So when you visit the website, you'll see. And for every product, we'll calculate the quantum price line and also the daily forecast, the forecast high and forecast low for you to do the trading. Okay, and also I will give you the stop loss and target price for you to reference if you like. Okay, so today we'll focus on that. So quantum trading technique, not difficult. In fact, it's a strictly application for the strategy we learned before. Okay, so the most important part is that we have the day trade daily trading forecast, right? The forecast high and forecast low. So for most of the user, for inexperienced user, of course, when it touch the forecast high, you sell. When it touch or close to forecast low, you buy. Simple. So that's why for most of my fans or members in the Quantum Finance Forex Center, it's very easy. Whether it's make money or not is another thing. Okay, so it's good. So that is the method number one. Okay, in fact, this method is the most important method because when the computer tell you the focus high or low, of course it means most of the time it will be the day high, most of the time it will be the day low. Of course, people will think, oh, day low buy, day high sell, right? So not difficult to imagine. Okay, whether it's accurate or not, it depends, right? But overall, it's quite accurate. Overall speaking, okay. So for the inexperienced investor, okay, so it's simple. Day low buy, day high sell. Simple as that. Not difficult. So I think the most difficult thing is what kind of product you choose, right? So it depends on your favor because my experience is different investors have different preferences. Some like to choose the Dow Jones, some like to choose the gold, and many in China like to choose silver. I don't know why, and some others, but not the cryptocurrency. I think cryptocurrency is what should I say? Not so accurate in some sense because it's too fluctuating. Okay, and also I think the second point is because compare with other product, okay, worldwide product, the market volume is not so high as compared with currency, of course. Okay, so that one of the reason the accuracy for the forecast is not so high. All the time is the lowest for the current currency. Forex is very accurate in some because the forex market is a very big market. Big in the sense that human intervention is not too much. You imagine, computer can only forecast something natural. Okay, if there is too many human intervention, of course it cannot be too correct, right? So it's the first method. Day high, sell. Day low, buy. Simple and stop loss. Remember. Okay, so method number one. In fact, half of the user using this method. It's simple one. Right, just like you see the weather report and you take the action. Okay, method number one. Method number two, using the same method but doing the averaging. It's a good practice. The main reason why you give you several quantum price line is when you break out, so you will average to different level, right? So the day low you buy 1/3, and then the lowest quantum level you buy 1/3, and then 1/3. And only 3 is enough. Okay, all the time it should be below 2. And then after all, your price will be better. Which means using the transitional method together with averaging, very, very useful. All the time in the TV, I highly recommend people doing so. No, only one batch, using 2 or up to 3. Method number 2, simple. Okay, method 2.0. Using the breakout trading strategy. Okay, as I always say, this strategy is only for some what I call experienced trader, which means when you're experienced and you have some idea of the market and it is a breakout market. By doing so, when it breaks out from the day high and above the quantum price line, because you believe the quantum price line is a kind of resistance point, right? You will rather sell, you buy. Same for the breakout from the day low. After the quantum price line, you what? Okay, you do it in the opposite direction, right? To break out. So either go this and this. Okay, breakout direction. In fact, the breakout all the time is come up with some idea first, but it makes sense. As I can tell you, you can do the statistic. When the market break out a lot. Okay, of course it will be fall beyond the day high and low and at least one quantum price line. Okay, they really exist. You can do the testing because you have the 2000 trading history. You can do the testing. You can do that. Okay. So breakout strategies using the day high low together with the quantum price line. So the 2.1, of course, you can again combine with the averaging, because if it break out into different steps, right? So every step you can invest a little bit. You can do so, of course, but in breakout direction, right? Okay. Of course, remember to stop loss, especially for breakout, because breakout can break out a lot, right? 3.0, hedging. Hedging is in terms of contract is very simple, because we have the forecast high low, right? And also we have the quantum price line, which means, so for example, when it touch the day high, okay, you can trigger a selling low, and at the same time you can set a hedging beyond the quantum price line over this day high. Same for the second direction, you can. And the most important part is because the day high low and the quantum price line are all predefined by the computer system, which means it's very easy for you to write a program on that, right? No need to think about the difficult technical and analytical technique, right? Which means you already have the day high low concept and also the different price line into your system. Just the strategies, using hedging strategies. Okay. So that's also good enough. So future trend and direction for the quant traders. So you can see the funny thing is we learned so much on the quantum price line and quantum field theory, and come up with the system, the daily forecast and the quantum price line. How to make use of it is very simple. Right? It only takes us less than half an hour, right? To do so. Not difficult, of course. All the time, as I always say, good methods should be very simple. Whether it's true or not, again, I can tell you that it depends on how many people believe and how accurate the model is, of course. But all the time, they are closely related. Okay, the more accurate it is, the more people believe. The more people believe, the more accurate it is. Especially for finance. So as I always say, for quantum finance is, I think the most important part is you have to gather more experience, okay, and to be neutral and also to be objective. Okay, objective meaning that stick to the program trading. Don't do any personal judgment too much. If you see my video, okay, in Baidu, okay, every day we have the video, okay, installed in CTV. It's I never give my own directions. I totally believe in the computer model, because if you believe in the computer model, you should not have too many personal judgment. Because I can tell that all the time the personal judgment is incorrect during critical period. But maybe okay all the time it seems to be correct, but in fact it's not. As I always say, human all the time is selective memory. Okay, they all believe in something, they feel happy. But don't do so in finance, because it's very dangerous. So the main reason why, as I always say, believe in whatever model, in computer model is for trading. It's good. Because when you are using computer model all the time, you will stop loss. That is the reason why. Okay, so don't be too greedy. Okay, and also doing more testing before you do the actual trading. All the times we recommend people is doing trading for 100 days, at least trading days. I mean, before you do the actual trading, because you have to do a lot of experience. And thanks for the MT4, okay, they provide the tools for us to do so. Okay, make use of it. Okay. So next we will talk about another funny and interesting topics on AI, and we will talk about 3 different techniques or methodologies. Neural networks, fuzzy logic, and genetic algorithm. Okay, because chapter 7 is quite large, so I will split into 2 lectures. Okay, the first part we will talk about general AI and neural networks, And the second part, I will talk about the first logic and genetic algorithm. Okay, so meet you guys next week. Thank you. Bye bye.